All right, folks, a serious conundrum for investors, right? Think about this. Software has never been cheaper. Yet, look at this. Starbucks taps AI to cut reliance on Microsoft, IBM software. I mean, this is the kind of scary stuff here, folks. And again, right now, software, it's never been cheaper, yet the CTO of Starbucks told their employees, hey, there's a clear opportunity to reduce spend on software. My next guest has just done his own survey of CIOs, also an assortment of channel checks. I want to bring in Citi co-head of U.S. software equity research, Tyler Radke. And, so we see these headlines, we'll go back to this headline for a second. It's like they're saying, what the market has been sort of inferring for a while, that AI does present some sort of a threat to software.
Yeah. Well, it's funny, if they're worried about paying $30 a seat per month for Microsoft, I hope they don't charge me $10 for my next latte, right? But look, I mean, I think that you have this dynamic. You talked about the valuations of software never been cheaper, but the cost of creating software has never been cheaper, right? All these coding agents, all the AI labs, right? They're enabling people to build faster. Now, we don't know if that's going to work, right? Companies have tried to build their own solutions in the past and have had to turn to vendors like Microsoft, like Oracle, et cetera.
You have a buy on both those stocks.
We do. And look, I think actually Microsoft and Oracle, right, they do have applications, Outlook, Windows Office, but they have some of the largest hyperscaler infrastructure businesses that are running these GPUs, that are running these major models. Microsoft in particular now has their own series of models that can compete.
As an investor, though, when I look at this, I say, man, software is cheap. I should jump in. You have caution about just not being lured simply based on this sort of stuff alone.
Yeah, the problem with these is things look cheap when estimates are too high, right?
I got you.
And so I think there's a lot of concerns, both in the estimates, but also the terminal value. What is this going to look like 3-5 years? I mean, think about how much has happened in terms of AI progress, innovation. These companies that were zero in revenue a few years ago are now billions of dollars almost overnight.
Some of the trends that you're seeing, the CIO survey and some of the other things, there is improved spending, but it's kind of focused on cloud and data.
That's right. Yeah. So we ran a survey over 100 key IT decision makers at big companies. Overall budgets are improving, which is good versus Q1, but I think they're improving because everyone's spending more on AI. We hear these concerns around token bills running up. We think the best place to be in software are the companies that are at that data management, that hyperscaler layer. Microsoft, we talked about, Snowflake, MongoDB, Palantir. Those are among our top picks.
2026 earnings seasons are upon us. You're looking for improved spending. You already kind of got a feeling that's going to happen.
Yeah.
When you say the data layer right now, what does that mean for folks watching the show?
Yeah. So if you hear about AI adoption, right? The problem for a big company adopting AI, it's not that, hey, we don't have enough money. It's not that there's not enough compute spend. It's our data is not in order, right? We may have data that's sitting all over the place. It's not cohesive. We know garbage in equals garbage out. Right, so we have to get this in order to take advantage of AI. And the companies that have done the best year to date, you look at companies like Snowflake, right? They had a monster earnings last quarter. We think those types of companies that are not selling applications that charge based on an employee, but actually monetize based on the amount of data, the queries, all that code has to live in a database, right?
That seat-based stuff is out then, right? I mean, there's another downgrade on software.com this morning. You already had it in the neutral.
Right. Yeah, we've been cautious on Salesforce the last 5 years, but you're seeing that play out a little bit.
Token maximization to AI optimization. What does that mean?
Yeah, so as we've seen over the last, since the beginning of the year, really, right? These AI companies have grown from single-digit billion to $30-40 billion run rates, like almost overnight. Companies have basically had competitions on their engineers who can spend the most tokens. And now they're kind of saying, wait a minute, this is expensive, right? And how do we get value? So the companies that can do these model routing, you don't need the latest model from Anthropic to do a basic white-collar labor job, right? Let's get something that's 10x, 20x, 30x cheaper to do something like send an email or respond to a customer.
Right there.
So that's what's happening. But these, you're still, tokens are growing exponentially because there's more and more use cases that are cropping up as this stuff gets cheaper.
Right. So the bottom line is, I mean, you're really fine tuning it. Snowflake, Mongo, Palantir, Microsoft. Those are the kind of names that taking advantage of these things, the data layer and layering and those kind of sort of things.
Yeah, that's right. I think there are some interesting opportunities in some application software names. So we did launch on Figma recently. We're constructive there, but it's, by and large, we sort of prefer the data layer names.
Well, full disclosure, I just have put my subscribers in Figma, so I saw you had a buy on it. I felt much better.
Yeah. All right. Good to see you.
Good seeing you.
Thank you.
Thanks a lot. All right, folks, coming